Welcome to the Season 3 Ward's Way podcast, where we're covering the hot legislative topics of 2025. From tariffs to tunnels and bridges. From foreign trade zones to workers' compensation. To the Fort Lauderdale International Boat Show. To the Marine Research Hub. Industry experts and clarification on the B1, B2 visas. Join us as we celebrate 75 years in business, and we're just getting started. So welcome everybody to Season 3 of the Ward's Way podcast. I'm here with my very dear friend, Ian Greenway, who's president of CEO of LIG Marine Managers. I got it wrong. CEO. Okay. Now, I can talk about this. Your son is the president?
My son is the president.
Okay, so see, we like multi-generational businesses, so congratulations on that.
Thank you.
And you guys have been in business
36 years.
6 years. Congratulations to that. So
not quite as long as Ward's, but we're trying to catch up.
That's right. That's right. Well, you and I have worked together, though, for going on quite some time.
Yes, I think that's a good number.
Yes, we will just leave it at that. But I have a book here that I got. So how do you want to tell the story of how we first met, or should I tell the story? Because I'll tell the story. So I have this book for everybody to see, and it's from June of 2000. So when I first started at Ward's in 1996, I was going to be a law student and become a lawyer. And my dad said to me, there's enough lawyers in the world. And he said, but if you really want to get involved in something legislatively, I have something for you, and it's just not right. I think we pay way too much on this workers' comp thing that I've been telling you about, and this is how he phrased it. And I think you should look into it and see if there's something, you want to be into politics and legislative, see what there's something you can do. So I called my insurance agents at the time, and I said, how do I find out more about this Longshore and Harbor Workers Compensation Act that we're paying all this extra federal workers comp for? And they said, oh, you have to go to a seminar. Come with us to see Ian Greenway. He's doing a, what do you call it, with your continuing education credits?
That's right.
Okay. Yeah. And so you were doing a seminar, and so I went to your first seminar and waited for you, where you went through who's a longshoreman. And I remember you wore all these hats. Is a painter a longshoreman? What were some of your construction? What were some of your hats?
Worker, chef.
Chef, that's right.
And then obviously the captain, deckhand.
Correct. And none of them were longshoremen.
Well,
was anybody?
Circumstances.
So okay, so maybe I need to take the course again. And then I went to it, and I remember raising my hand and saying, "Well, why is it limited?" Because at the time, it applied to recreational vessels over 65 feet. And I remember raising my hand and saying, why is it at 65 feet? And you said, good question, but it is what it is. And I said, well, do you think we can change it? And you said, probably not during this course, but I'll talk to you after. And probably like, why is this? And then I think I went to 2 or 3 more of them. And finally you were like, do you really want to talk about something or what? And so then we started talking about how could we change it? And my recollection was that we wanted to get rid of the footage, not just increase the footage.
Absolutely.
And what was your thought on that? So,
I mean, it made sense. I mean, back when the Act was put into force, the 65-foot was really derived around how vessels were constructed. Mm-hmm. And beyond 65-foot, they were being built more like a ship than they were a yacht.
Right.
Then as construction techniques changed, that sort of went away. You can build a 200-foot vessel today pretty much the same as you build a 20-foot vessel. I'm not going to pop out hundreds of them. But that was really the background of the 65-foot. But the real driving force, I think, back then was we had a surcharge set by the NCCI for the state of Florida of 2.65 times the rate. So if you had a workers' comp rate of $10 back then, you were paying $26.50 per 100 payroll. Mm-hmm. Today, that's less than a 50-cent rise in rate. But it was ridiculously expensive, and the losses weren't justified.
And also, without getting too technical, so what I learned in that process was, first off, we probably shouldn't be included in it. That we felt, my family and I, that well, geez, in 1984, if they were trying to get rid of the recreational industry, which at the time, my understanding was there really wasn't a boat built in the U.S. bigger than that 65 feet, which I think could be a myth. I'm not sure.
I think there are a few, but it was definitely mostly.
But it was intended to capture the industry and exclude it. And so over time, it was just that footage had gotten had become somewhat irrelevant into the size of the way the industry was growing. But also, like you said, it really was a huge operating expense for us and unknown. So we had this surcharge. And a lot of that has to do with, before we get into that, I'd like to talk about you and your company and how long you've been doing this and what made you talk to that strange girl going to your continuing education credits and course and give me some of your background so that the listeners and the audience understand why you're the expert.
Well, mostly because I'm curious, I think is the simple answer to that question. I started LIG now 36 years ago, and we were writing a lot of different marine insurance. We were described as an MGA or a wholesaler.
Okay.
We don't deal directly with the public. We deal with the agents who have a specific need for marine insurance. And quite frankly, somebody came to me very early on in the LIG days and said, can you write Longshore? And my answer to that question was, what's Longshore? I'd never heard of it. Oh, yeah.
Wow.
I'd never really... I'd heard of it in passing, but I really didn't know how it worked or what it did. And obviously, the first passes of that were the very heavy commercial operations, the container ports, the shipyards, and things like that. But the more I studied it, and in fact, the more I taught it to people, the more I understand how it affected industries, particularly the recreational marine industry, where it just was never intended to do that.
Correct.
It was really intended to deal with the commercial. They set up some exclusionary language in there, but it wasn't horribly clear exactly who was excluded and who wasn't. And then, as you said, the 65-foot limitation was there. But I've always been a very curious person. When I want to find out about something, I want to go wholeheartedly in it. And then starting to teach it as you were one of the, I would say the first attendees at the seminars, but fairly early on.
Yeah.
You are put in a position where you have to learn more about it.
Absolutely.
You can't stand up in front of people and say, I don't know what this is, but here's Longshore, you've got to buy it.
Well, and we act like this has been part of our original Constitution since 76, and it hasn't. I mean, it came about in
1926.
But then it was largely untouched for decades.
Yeah.
And then it came about there was an amendment in the 70s.
Early 70s, and then another one in the early 80s.
And the early 80s. And I think it was just as the maritime industry started growing and morphing and having a true recreational industry. I mean, clearly in 1926, we weren't, while there were luxury yachts at the time, I don't think we were looking at them at the same level as an industry. And so the Longshore Act really was created. What I also learned through you was as a gap-filling measure. So we had the Jones Act that's been around since the 1800s, and that covers
1926.
same thing?
Yeah, pretty close.
Okay.
6 years difference.
All right, so boy, you got to fact-check me. Come on. So 1920s, so we were dealing with the Jones Act, and then we have state workers' compensation, so land-based. And when were all of those?
First state workers' compensation just around the turn of the 1900s.
Okay.
I think New York was certainly the first state. I think it was 1898 or thereabouts.
Okay. So we're actually coming up on the 100th anniversary of the Longshore Act.
I know.
Very apropos.
Next year.
Wow.
That, so.
Okay, we'll have to have some sort of...
And it flipped. It was mostly to give a common element of coverage to anybody in whatever state. They felt that maritime work, whether it's the Jones Act, the crew side, or the Longshore side, the land-based workers, were going to get the same set of benefits regardless of if they were in New York, New Jersey, Florida, California, anywhere in the country. It followed along from the Railroad Act, which were a little earlier. I think they were about 1914, 1912, somewhere in that range. And again, that was to give a uniform set of benefits. And that was the basis. But when it was started, it was a named act. In other words, you were covered if you were in one of the named professions. If you were loading, unloading a vessel, if you were working in a port, handling lines, handling cargo, repairing a ship. Those were the named ones. And it flipped in those 70s and 80s changes into be you're covered unless you're excluded. So that was the big change in the history.
And why do you think, I mean, this one definitely we haven't ever really talked about, why do you think there was a push for the exclusion, just because it wasn't what it was intended to do?
I think it was really a development. I mean, commercial dock workers in the early 20th century were very different to the longshoremen of today. You know, they could be pushing buttons, things like that. I think it's really how the industry developed. There was definitely a big separation between the commercial work and the recreational work back in the 1920s, 1930s, and those lines kept blurring and blurring. So they really flipped it to bring in a whole set of workers again, which I don't think it was ever really intended to do.
Right.
But all the repair and service people on the wreck market got dragged in almost by mistake.
So I know that in looking at it, one of my arguments to you was if they attempted to. When I say they, if the federal government attempted to capture the industry and exclude it, can we get them to go bigger on the footage? But it was also one of your comments originally to me, and our original goal was not necessarily to change the federal act. It was, let's talk to NCCI, National Council on Compensation Insurance, that establishes the rates for workers' comp. Because the government says we have to have it, but it doesn't have to say that it has to be a surcharge. Right. So explain that surcharge. How did we end up there?
Just really to try and control the costs. I mean, if it was longshore benefits will always be more than state benefits. The longshore benefits, of course, are federal, so you're supposed to get pretty much the same wherever you are in the country. But different states have different levels of benefits. If you go up to Connecticut, for example, it's a very closely matched to the longshore. So there's not a lot of surcharge there. But the perception of the benefit levels here in Florida versus the longshore levels was at that 256 mark back when we started around 2000. And really, the losses just didn't support that.
Correct.
It was way overcharged. And I believe that was wrong. And it made people not buy because it was so expensive. To make it affordable and to get it into a point where the losses and premiums were roughly in balance, you could bring that surcharge down. We were successful for the marine contractors to actually get a specific code for marine contractors today. They were paying $50 to $60. Back in 2000s, now they're paying, I think the latest rate somewhere in the $10 range.
So let's talk about that. So what I wanted to get to was that part of the reason that the recreational industry, so NCCI comes up with this whole classification codes, a giant book that has every industry and a code, and then there are actuarials that go in and say, this is what the inherent risk of this type of work. It's given a rating, so to speak, and that's how risky you are, and therefore that's what your premium is per $100 of payroll.
Right.
Is that. But the recreational marine industry didn't have an established class code, so therefore it was just in a surcharge code. And
it's interesting. You had a marina has always had established state act rate and longshore rate. And here in Florida, they've typically been somewhere in the 10 to 20% difference in pricing. If the marina base rate was 11, you might be charged 12 or 13 for the longshore portion.
Right. Reasonable, something predictable.
It is, and something easily to track and to measure. The problem is the single discipline contractor doesn't fall into that. So somebody that's, let's say, a fiberglass.
How about electricians?
Electrician.
That's right.
Good example. I wonder where that came from.
Yeah, I don't know.
An electrician, you get classified as an electrician, and there is no marine electrician class
That's right.
code. So you were suffering, your group of companies were suffering from that 2.65 surcharge. So your base rate that might have been $10 would have been $26.50. That's outrageously expensive.
And not warranted.
And not warranted because it was never based on claims. All those other rates were based on how much premium did we collect, how much payroll was there, and how many claims, how much in dollar terms were the claims. That's how the actuaries worked it. But when they created the surcharge, or when they create the surcharge even today, They look at the benefit levels that are written in the law. They look at the benefit levels that are written in the Longshore Act and make a comparison of the two. So it's a very hypothetical number. It was never really supported by strong actuarial data. Boat building had the same, recreational boat building had the same thing. They had a longshore rate in there. It was, again, typically 10, 15, 20% more than the base rate. So, again, affordable, relatively easy to get, and based on facts of claims.
So I guess what I wanted people to understand is this was a multi-pronged approach. So one, we were talking about let's figure out what it looks like to change the act. So we have that going. Let's make the footage something that's makes sense. And at the time, it was in the early 2000s. At the same time, it was, well, let's talk to NCCI about this surcharge and find out what is it based on. We were able to do some of our own actuarial data through some of these classification codes to see what were the claims versus what was, and we found exactly what you're stating, that the claims did not offset the premiums that were being generated. And also we found that the number of claims went down the more specialized the field.
Yeah.
So talk about that. So
yeah, the ideal way of doing would be have a marine electrician's class code, a longshore class code that goes with that.
Just like the builders and the marinas.
Yeah. But there's not that many in your profession.
Correct.
So it didn't give them enough actuarial base. I can't say I agree with all NCCI arguments. I thought there should be a recreational marine repair class code.
Correct. And we talked about that, and we pursued that.
Yeah. But again, you'd have to take, you've got some high hazard type of jobs in there. Obviously, engine repair is a little bit more high hazard than fiberglass repair or things.
Sure.
Some base level ones. Rigging, for example, would be a tough one. So trying to group those different industries together would have been tough, and I get it.
And sometimes be careful what you ask for, right? Because maybe they'll come out with a rate that's firm fixed, but it's not really at a number that you wanted.
Yeah. And the people who were in low rate classification would have been pushed up a little bit to get into that combined one, and maybe the high would gain a little bit. But I think the real work that paid off on the rating side was gradually chipping away at that surcharge. So it's now I think it's in the high 40% now. So again, not cheap, but it's certainly much better than the 265 we had.
Well, and I do think, ultimately the goal, ironically, while it sounds like it's cut, remove, exclude, all these terms that we're using, what was happening is our industry was largely that you had a group of individuals that were getting the coverage, and it became an us and them.
Yeah.
So there was disadvantage in competition. For example, a company like mine is paying the $26 to $30 per $100 of payroll, but it's very it's at a disadvantage for us with our competitor that maybe isn't paying at all. But then number two, you have employees going without coverage. So they're taking the exemption. So if you're with a company, if you have a business of 5 employees or less, 3 employees or less, you can claim the state comp exemption. And then people were saying, well, I don't need the Longshore. You have to have the state comp in order to get the Longshore, but I'm excluded from state comp, so I don't really need the Longshore. So how can the government force me to do it, and how do I get in? And it was causing just a lot of confusion. But at the end of the day, workers were going without coverage, and that's not what we wanted.
Yeah, and I think it's important to remember here where the law in Florida, and I think it always sends a mixed message, say if you don't have more than 3 employees, you're not forced to buy workers' comp insurance.
Okay.
Other than in the construction field, true construction. Residential, commercial, it's 1 employee. But that doesn't take away the liability. So if your employee is injured with 2 employees and you haven't bought workers' comp, you end up having to pay those benefits without any insurance behind. And I think that's a terribly bad mixed message. Yes, you can, quote, exempt from it, but it doesn't take away that liability.
And also as a business, if you're not providing that to your employees, you can be sued.
Absolutely. You pay state or longshore benefits, and then you have potential for tort liability on top of it.
Right. Whereas if you have those policies in place, you cannot be sued for that.
Correct. They're called sole remedy policies. So if you have workers' comp And if you have the longshore exposure, you have longshore coverage, enforce the suit. You can't stop somebody suing you, but it's an instant dismissal. It's just go away. It's sole remedy. Yeah, there's no tort liability.
Gotcha. So we're going to get to where we are today and kind of go through like a little, is this myth versus fact? Tell me the truth. But before we get to that, we were successful in modifying the act, which is critical in the sense that it is the foundation of really the labor unions in this country, correct? The Longshore and Harbor Workers' Compensation Act. And we were able to modify the exclusions for recreational vessels, not from a build perspective, but from a repair and dismantle. So let's talk about that. What were we able to get?
Well, simplistically, we managed to get and you led the effort, so you probably know this even better than I do. We managed to get the 65-foot rule removed for repair of recreational vessels.
Okay.
We thought as we were going through the process, the 65-foot was going to disappear completely. Somewhere at the last minute, the manufacturers decided they didn't want to have that change. So still the building and manufacturing has that 65-foot limitation in it. That does present some interesting problems because the person who's repairing an old vessel, let's say doing HVAC work on an old vessel, fairly high hazard job, handling ductwork and that type of thing, because it's a repair job, is recreational. It's a state act claim. But if they do it on a new build, it's exactly the same work, probably a safer job because they're working as the hull's being built, clean materials, things like that. If that vessel's over 65 foot, it's a longshore job. And that seems wrong to me because the balance
It's the same boat, right?
Well, not just the same boat. It's actually a more modern, easier to work on
No,
vessel.
I meant it's the same boat if, for example, it's being built and then later it goes to a marina for a repair. It's the exact same boat, but over here it was a longshore vessel
when it's constructed.
Environment when it's being constructed, and yet at the marina where it's being repaired, it's not. It's excluded.
It's crazy.
Yeah, and it's
if
the
anything,
same boat.
It should be the other way around because the more high hazard is the repair work.
Absolutely not. Who invited you? No. No, but you're right. And I think part of the reason that the builders were not so interested in changing the law is because they had the predictable rates. It was a predictable cost that went into the operations of it. And so there wasn't really a line of confusion, and it wasn't costing jobs. Workers were having coverage. It wasn't the same scenario where it was for the yards, the marinas, and the repair industry that workers were truly going without coverage.
And I think, for a builder, it's a little easier because if I'm building that 70, 80-foot yacht, I've got a gang working on that that's very clear, it's defined, it's a 3, 6, 12-month job.
Correct.
Whereas repair, you could be working on a 60-foot one day and a 70-foot the next, or even morning and afternoon. So much harder to track. And as we talked about before, the builder had established rates where there wasn't a huge surcharge between the state act and the longshore.
Right.
Because they had that established longshore rate.
Well, and I have to say, we did learn a lot in going. Do you remember how many bills we actually introduced before this got?
A number.
A number. Yeah. And in case anybody doesn't know how our government works, actually, every 2 years, no matter what, if the bill doesn't pass, then you have to start all over and find a new bill sponsor and a new. And so I was looking back when we testified before Congress. It was during the 108th Congress, and it was in July. And you and I had an opportunity, and it was H.R. 1329 was our bill.
Glad you can remember all that.
Well, I remember because I looked it up, and I was trying to find the video that would have been good. We could be segueing into 20-year-old video of each of us,
Thank you.
Back then. But I couldn't find it. But I did find it so interesting that after we did all of these testimonies, we did these hearings, we spent time with NCCI, we talked to them about the claims versus the premiums, we talked about these exemptions and how they should be across the board, and the recreation industry has different inherent. And in the end, I believe it was on about page 832 of the American Restoration and Recovery Act, the Obama Act of 2009. Yeah. And it was in a very strict parliamentary sentence. And I've never been so thrilled to see that happen. But
it was 10 years from the day we basically started.
It was 10 years. Yeah. And that took 10 years. And sadly, that was 16 years ago. And
you can fudge the math a little.
I know. Yeah. We could fudge that. It was just not long ago. Yeah. We'll say that. So fast forward, how did it all work out? And I will say today, where we are, I believe, one, that we were successful in, I don't know if we had a hand in maybe modifying those rates. I mean, what made all the rates kind of come down and become, where are we today?
Well, let's just say, I think, when 2009 rolled around and it was in ARA, we were celebrating. And it really was a big win. And to make that modification, which was the last one for 26 years before that.
Correct.
So the problem then became when
in 2012.
2012, when they published the regulations to interpret that act. Mm-hmm. And they did it, I think it was on Christmas Eve or New Year's Eve. It was just right over the holidays. And they thought that nobody would pay attention. And it just made everything so much more complicated. If we just stayed where we were in 2009, I think we wouldn't be having this conversation today.
So from a civics perspective, so we were able to successfully modify the act. There was a bill in Congress, multiple bills. We went through multiple hearings, but in the end, there was a strict parliamentarian language insert into a huge omnibus bill that was able to change the act in 2009. Right. But then fast forward in 2012, the Department of Labor that implements the laws that Congress passes as it relates specifically to the Longshore Act, it falls under the Department of Labor agency, I guess, did a rule implementation and decided to modify the definition of recreational vessel. And I absolutely 100%, it's my podcast, so I could say it, I believe it was 100% done as a punitive. It was, they didn't like it. Nobody wanted this bill to be changed. It was, if I heard any more of those, the camel's nose under the tent, the slippery slope, that somehow this was, that we were actually the people that were going to be single-handedly responsible for taking all of these people out of the federal workers' comp system. And that really was not at all what we were trying to do. We were trying to stick to our little recreational marine industry. So the Department of Labor came along and redefined what a recreational vessel was, and what has that done?
At that point, nobody really had that question. Nobody ever asked me to define a recreational vessel.
It had always been primarily used for pleasure.
If we look at it, you could tell it was a recreational vessel.
Yep.
Then all these regulations came in, and it was so complicated. I mean, I built like a matrix to try and understand all those, to put into a set of definition. And there's some really oddball sort of nuances in here. Bareboat charters over 12 passengers are considered longshore, but if it's 11 passengers, it's not. And again, that
had never had anything to do with right. And then inspected vessel versus uninspected vessel.
There were just some crazy things, and that's really where it created so much confusion. And you can sit and go into any marina here, look at a sport fish, and one of it's used as a 6-pack charter, and it's considered commercial under these new 2012 regulations. And the next vessel, which is a personal vessel looking identical, is a state act vessel. It's a non-longshore vessel. And it's just a crazy set of definitions that would derive predominantly from that rulemaking.
I agree. And what I try to remind people, too, is that longshore and workers' comp comes after the fact. So somebody gets hurt, then they try to decide who's going to be responsible. So walk me through that. So right now, I'm in a yard. I am an employee. I'll give you various scenarios. So I'm a sole proprietor, and I'm in a yard, and I have provided my state comp exemption, but I fall and get hurt in a yard. What happens?
Well, I mean, the first thing is a minor injury is not going to trigger a whole bunch of investigation. If I'm a state act employee and I scrape my knee or twist my wrist or something like that, that's not going to come. It's going to come from the major injury. And this is not hypothetical. It's real life. There are claims out there today that have this. And when somebody is seriously injured, they're going to go in and they're going to try and find a deep pocket to pay for their lost wages, their medical expenses, and everything else. Most of these sole proprietors don't have any type of medical insurance or anything to pay for those medical expenses, let alone any lost income. So they're going to go find that deep pocket. How do they find the deep pocket? Well, they don't have to be working for the marina. The marina doesn't have to hire them to make that marina the deep pocket. Just the fact that the marina or the boatyard has allowed them access to the premises
is facilitating the work?
Is enough to make that trigger start.
Okay.
The next one you're going to look at is that vessel considered a longshore vessel? So we're now looking at, is it a charter boat? Is it a head boat? Is it a six-pack charter? Maybe a towboat of some variety, recreational, a towing recreational vessel, but the vessel doing the tow is a commercial vessel.
Mm-hmm.
So you're going through all this set of ramifications. And then you go, all right, well, where's the vessel? Is the vessel got any money potentially? If so, perhaps there's some recourse against the vessel, or is it even in this jurisdiction anymore? It may have already sailed out of the U.S. waters. So they're always looking for the deep pocket. And this is one of the things Department of Labor, called the Department of Labor for a reason. They're there to try and help labor. Mm-hmm. So they're going to go find that deep pocket. There is a case locally at the moment where a subcontractor fell on a six-pack charter boat. He had no insurance. He'd waived his exemption to get into the yard. That yard is now paying approximately a $600,000 claim. And that is not just the dollars being paid by the insurance company. That drives up the yard's mod. It drives up their loss history. Their record wasn't the best in the world before this. Now you put a $600,000 in there. It's going to make it very difficult for them to find.
And does that yard have coverage now for this employee?
The yard did have Longshore on an if-any basis.
Okay.
To get it on an if-any basis is a very inexpensive process. We recommend it for any marina or boat yard for a number of reasons, but particularly to cover that uninsured sub.
And also they cannot be sued.
They cannot be sued if they've got Longshore.
If they have Longshore in place, they cannot be personally sued.
Right. Again, you can go and find it.
Somebody can go find somebody to sue, but it's not going to.
And there's really a couple of reasons here. I mean, number one is if you don't have Longshore on your workers' comp policy, not only do you not have the coverage, you don't have any defense costs. And if you've got a case where you're going to go, hey, that's not my responsibility, or that was not a Longshore vessel, it should have been a state act claim, it can cost you six figures to defend and win.
Right.
Those
and
cases.
You could win, but it still costs you six figures.
Because you can be sued. We can't stop you being sued.
And this is in federal court.
This is in federal court, which it makes
very expensive.
Makes it very expensive. Also can be a jury trial if you ever get that far. And consequently, if you're in that environment, then you're sort of rolling the dice a little bit because you do get occasional rogue verdicts. Sometimes from a judge, more commonly when there's a jury, they see somebody injured, he's got 3 kids at home, they're suffering because they don't have any income. They're looking for somebody to get paid, unfortunately, and you get those rogue verdicts. You could have a real exposure. The marina person who's actually repairing, replacing slips, docks, are considered Longshore. You've got the defense costs, and you've got that subcontractor, uninsured subcontractor, and that rogue verdict. All those reasons, for a minimum premium, I think is $200, $250 for a yard to add Longshore on an if-any basis. It gives you an unlimited defense cost policy, if nothing else.
And I think that's what about for small businesses? Because I'm always letting people know that maybe there's an opportunity in a yard. First off, how do you know you're never going to do any commercial work? You say that you always do recreational work, but maybe you do work on a dinner cruise, maybe you work on a towboat, maybe you work on a military vessel, and you should have that if any coverage. But also, if you're in a facility, what happens if I am a sole proprietor, I am in the safest contracting job it is, whatever that is, but I go into a yard that has both commercial and recreational. Technically, I should have to have Longshore to go into a yard that accommodates both?
You should.
Yeah.
I mean, if you're not working on the commercial vessel, then it's unlikely you'll ever succeed to get that claim. But that, again, doesn't stop somebody suing you. It doesn't stop you going
And it pays
forward.
for the defense costs.
Absolutely. And I think that's the critical part of it. But the basis of the Longshore Act, and for that matter, any workers' comp act, is you get injured, somebody's going to pay you for your lost wages, somebody's going to pay you for your medical expenses. And for that reason alone, particularly if you're in the slightly more hazardous class, yes, you can't be liable for yourself. You can't sue yourself effectively. But you can if you're a corporation, because the individual and the corporation are two separate legal entities, so they can cross-sue in that case.
Have you noticed an increase? I know that in people that obviously attend your coursework, et cetera, are highly more educated than a lot of others, but have you noticed that the agents and the insurance industry is keeping up? I know that at some point we were struggling.
Some don't. Yeah, I mean, there's no question there are better agents that understand this and understand the best ways to advise people. Then there's agents that don't. We actually converted our seminars now into a professional designation program.
Okay.
The 4-hour seminar that you probably thought was far too long when you first sat through it 20 years ago is now a 2-day, 16-hour seminar.
Maybe I need to up my game here.
And even then, I was wondering, how are we going to get 16 hours of material? When you actually get through it, we're even still at the top level of detail on that. And the average agent doesn't need to get right into the weeds of how does a claim get adjusted and stuff like that. But there's still a lot going on in the industry. One of the interesting parts we have, particularly down here in the Southeast, is that a lot of agents have 1 or 2 marine accounts.
Okay.
If you go to the West Coast or the Northeast, you find a few agents have 99% of the marine accounts.
Okay.
So they tend to be slightly better, more specialized in marine business and a better set of knowledge. Because we've got so many small agencies and so many small businesses in this neck of the woods, that knowledge is a little spread. Let's just put it nicely.
So how do consumers find more knowledge? Can they go to your website? Can they go, for example, like this book that I'm holding up that I got from one of the seminars? It really, it goes through the act, it goes through the exposures, it gives industry examples, employment. Where do people go to get the right information? If I call my agent, I have a wonderful agent.
You do?
I do. Jill Levy, Risk Strategies. If I to call Jill, whatever she tells me, I'm going to be like, okay, because my agent told me, and I feel like a lot of people have that trust and that relationship with their agents, but maybe they're not getting the right information. I feel like anybody that's telling somebody in the marine industry to go to these yards without Longshore is making a huge mistake.
I agree.
They're opening up themselves. The yard is exposing themselves to liability, allowing these companies in, and it's not really that expensive anymore. What could a policy be for? I'm not holding you to it, but I am kind of just ballpark. Back in the day, there used to be these minimum policies, $10,000, $20,000. We don't see that anymore, right?
There's some exceptions to that. I mean, the real what they call voluntary market policies, most people are around 5,000 up now. There's the involuntary market.
And the 5,000 is in premium or in payroll? Premium.
Yeah.
Okay.
In the involuntary market, you can go down, I think, to $1,500 today.
Okay.
In Florida's case, it's the Florida Work Comp JUA. Every state has a similar operation from that point of view. But I think there's a couple of things you do. I mean, I think when you're talking to your agent first, one of the questions is, how much of your business is marine?
Yep.
If the answer is, well, we do this, and this, or the agent's not going, it probably tells you they're not going to give you the right advice. Most agents across the country are general agents. They do all types of business. They'll do restaurants and hotels and everything.
Sure.
Like that, and some marine. Some are highly specialized. I mentioned the professional designation program we run today. It's called IMIS. Called CMIP is the designation. It's run the organization. It's called IMIS. CMIP, Certified Marine Insurance Professional. If the agent has got those 4 letters behind their name, and you might find it's CIC, CMIP, and maybe a couple of others. Then you've got somebody at least has gone through the training.
Is there a listing of all of this? Do you have this on your website? Do you have?
We can link it to the website. The actual sponsoring organization is called IMIS, IIMIS.com.
Okay. All right.
Or .org for that matter.
Okay.
And on there, every agent who's gone through there's 4 parts to this course, each is 16 hours, so they've gone through 64 hours of training. They passed a test on each section.
Good.
So, it's an online test. It's not rocket
still,
science, but it's still a test on the knowledge. And they've obtained and they maintain that professional designation. They have to come back every 2 years for one more seminar. So, again, if you're looking either for an agent, go to iimis.org or .com, and on there it shows a list of the graduates.
Okay, good.
You can pick by state. And then it'll explain. Some of them are underwriters in there. The vast majority are agents. There's a few MGAs like us in there. But look for an agent on there. But again, look, do you have that CMIP designation? That's going to certainly tell you the person. They may not be a specialist in marine, but they've gone through the training.
Sure. Well, at least you know that they're going to advise you properly and they're familiar with your industry.
Every day we see businesses that have been around 10, 15 years coming in through an agent to our office saying, we need longshore insurance. Okay, but you haven't had any in the past. Well, we didn't know. Our agent told us that we didn't need it. Mm-hmm. And it's such a common issue today. And unfortunately, some of it comes in after the claims happened. And you can't retroactively place this. Plus, I never really want to have somebody you say, oh, no, sorry, you can't do that commercial job because you don't have longshore.
Exactly. Why would you want to turn business away?
Yeah. Maybe you need to charge a little more for it because the rate's a little higher, but at least you have that available.
Well, that was going to be another question I had. So what can companies do if they're not sure? So one, they can go to this IMIS. IIMIS.
Yeah, International Institute for Marine Insurance Studies.
Okay. IIMIS, either .org or .com. Yeah. And they can get that. But also as a company, what can they do? I know, for example, I have to do like a self-audit every year. So I have to make sure that I keep my payroll classifications. I make sure that I have all of my employees separated by their category. So I have technicians, I have people in a retail store, I have admin staff, etc. So I keep that. So do you recommend people keep their employees, keep their payroll separate, understand, limit maybe who could be in a longshore situation so that they can understand?
Yeah. How
does the if any coverage work?
So the audit process is such that where the employer has to provide data to an auditor after the expiry of the policy. Part of that has to be what they call contemporary records of payroll. If you want to play a payroll split, let's say one of your technicians earns $100. If you just put that $100 in there and say, well, part of his work was Longshore and part was State Act, the auditor is forced to put all of it in Longshore.
Okay.
But if you can track it and say, well, on Tuesday from 9 o'clock till 3 o'clock, he was on a Longshore job, and from 3 o'clock to 5 o'clock, he was on a State Act job, or Wednesday he was on a State Act job. If you've got that tracking, you're allowed to payroll split.
Yep.
But you have to have that contemporary record. The auditor may not always ask for it, but it has to be there to prove it should you ever need it. Then at the year end, you go, okay, well, I added up Joe's total payroll. He's made $50,000, $20,000 of that was on Longshore work, $30,000 with that on State Act. You get to split that price, and that keeps the price under control at audit. Remember, with all the premiums you pay up front, they're only estimates. They're estimates based on what you think your payroll might be, and it's actually audited on the back end. So if your estimate says, oh, I think I'm going to do $100,000 of Longshore work, and you actually end up only doing 20, you get that $80,000 worth back.
And you do. Yeah, By the way, I've done the audits. I've done it. And I do believe that the more effort you put into organizing your payroll, even limiting, clearly, for example, in my company, I have a lot of administrative, I have a lot of retail people. None of those people are going to be in a yard. It's very limited to the 2 or 3 technicians that I have that are going to be at the level or are going to be the ones that I'm sending to the commercial work. And you absolutely know that in your own business, and you monitor the way that you take their payroll in and out.
And most payroll systems will allow you to put a code in.
Correct.
And I think you're 3684, if I can remember correctly, whatever the code.
5190 is my electrician's. Sorry. Yes. I just did my audit not that long.
Chrissy knows about that. But if you put a code into your payroll system, 5190, and then a second code, 5190F, which F designates federal, and I never understood why it wasn't L, but, F.
I thought of other things that could have.
True. But if you designate that in your payroll system, then it makes it so much easier to track and to summarize those payroll hours. And your technician might be doing some work here in the shop. They're basically back into state act again, even if that work is ultimately going on to a commercial vessel.
So I pull up another chair. I sit down the President, Trump, and we say, hey, we really want to get this right, and he's got a pencil. Is there anything else you would change in the act, or what would you change, or could we change?
Well, there's an interesting question.
I know. And you know what? I didn't think of it that long ago, and I didn't prep you with it. So there's no wrong answer.
I think I'd really just want to throw the rule book out. I mean, that was the thing that made it.
So the Department of Labor rule implementation, just kind of scratch that out, stick with what the original language was, and move on.
Let's rewind to 2011.
Let's do it. I'm going to email Trump today, this afternoon.
Okay.
Let's see if we can...
Again, to me, and it's not... Trying to sell an insurance policy, I don't think, is the critical part. It's trying to say that person can go home, if injured, with benefits, with somebody pay the medical expenses. Because I think somebody told me recently, failed to pay medical expenses is the number one reason for bankruptcy today, for personal bankruptcy.
Really?
Today. Yeah. And you get a serious injury, you go into hospital.
I have no doubt. You're right.
It's six figures before you settle low. I mean, these numbers are just getting astronomical now. And that becomes an instant burden on your family.
Yes. And as an employer, you need to take care of your employees, and employees need to be covered, and you need to take care of them.
But even as an owner-operator.
You need to take care of yourself.
Yes. And your family. And you want to, I mean, one of the big Longshore companies has a banner outside of most of their insureds that says, arrive home alive.
Yeah.
And fortunately, we don't get that many death claims in the rec industry. You do more in the commercial. But arrive home in one piece doesn't rhyme quite as well.
No.
I mean, but it's I think it's a very important, either arrive home in one piece or have the resources to get yourself back. The people that elect not to buy workers' comp are not providing they and their families the remedy should they get injured. So that's why it triggers on to go and find somebody to pay for the industry.
Yes.
For the injury, sorry.
So we need employers to cover their employees. We need the yards and marinas. What do you think they should do?
They've got to police this. I mean,
they've got to police it.
They don't
accept state comp exemptions unless you want to own them on Longshore.
Yeah, and remember, if that accident happens, you're going to get sued, and you may have defense costs, but at the end of the day, that claim's going to sit on your loss record for 5 years. It's going to drive up your experience mod. It's going to cost you more money.
Absolutely.
Than buying the insurance in the
Than
first
buying
place.
the insurance, having it, or policing it. Well, you heard it here today. Thank you for being here, Ian. I look forward to it. I'll call Trump. We'll try to get the Department of Labor's definition erased, and we'll go from there. But it's been an amazing journey, and I look forward to the next step, the next adventure.
Are you going to cure tariffs at the same time?
That's it too. So yeah, sure. We'll take care of that.
Okay. Thank you,
Thank you, Ian.
Thank you for inviting me.
Absolutely. Thank you for joining us this season on Season 3 of the Ward's Way podcast. Be sure you subscribe because there's much more to come.